Here's the expanded beginner trading lesson on chart reading, volume analysis, and price participation. Alright everyone, welcome back to Trading Club X7U. Today we're going to tackle one of the most fundamental concepts in chart reading and trading, volume analysis, and why price needs participation. This is a crucial topic, because it's often overlooked by beginners, and yet it's a game changer when you finally grasp it. Imagine you're at a restaurant, and a group of people just walked in. At first, they're looking at the menu, and nothing seems to be happening. Then, they start ordering food. The server runs around frantically, and suddenly, the kitchen is buzzing with activity. The customers are participating, and the restaurant is responding. It's the same with the market. Price is like the orders, and volume is like the customers participating. If there's heavy participation, the price will move accordingly. Now, let's talk about what participation really means. It's not just the absolute number of shares traded, but also the relative importance of that number compared to the overall market activity. For example, if we're looking at a chart of a small cap stock, a trading volume of 10,000 might be significant. But if we're looking at a widely traded index like the S&P 500, 10,000 trades might be negligible. Here's a specific example to help illustrate the concept. Let's say you're following a retail stock like Zara, which has a market capitalization of 10 billion. If the trading volume on a particular day is 1 million shares, that's a pretty significant number. But if you're looking at a tech giant like Apple, which has a market capitalization of 2 trillion, a trading volume of 1 million shares would be tiny. So, when analyzing volume, it's essential to look at the relative size of the stock or asset in relation to its overall market activity. Now, let's get into some common beginner mistakes. Many traders focus solely on price, without considering the underlying volume. They might think the market is trending, when in reality, it's just a lack of participation. Or, they might think they can catch a reversal by buying or selling at the right time, without realizing that the market is just going through a phase of low participation. We've all been guilty of this at some point, so don't worry if you've made these mistakes before. To avoid these mistakes, we need to develop a more nuanced understanding of volume analysis. We need to look at the relative volume, the trading range, and the overall market sentiment. This will help us make more informed trading decisions. Here are a few key things to look for when analyzing volume. Relative volume. This is the ratio of the current trading volume to the average trading volume over a specific period. If the relative volume is high, it means that the current trading activity is significantly above average. Trading range. This is the difference between the high and low prices for the day or period. A widening trading range indicates increasing volatility and potentially increasing trading activity. Market sentiment. This is the overall attitude of traders and investors towards a particular stock or asset. You can gauge market sentiment by looking at indicators like put-call ratios, options open interest, and sentiment surveys. By combining these factors, you can get a more complete picture of the market and make more informed trading decisions. And here's a practical exercise for you to practice what you've learned. Open a demo chart or your paper trading journal and identify one stock or asset that you follow closely. Take a look at the last 3 days of trading data and calculate the trading range, average volume, and relative volume. Write down your observations, and ask yourself these questions. Remember, the goal is to develop a more nuanced understanding of volume analysis and how it relates to price participation. By doing so, you'll be able to make more informed trading decisions and avoid common beginner mistakes. Recap. Volume analysis is a crucial aspect of chart reading and trading. By focusing on the relative importance of trading volumes, we can identify opportunities and potential pitfalls. Remember, practice is key, so make sure to apply what you've learned in this lesson to your trading journal or demo chart. Thanks for watching Trading Club 7U. Before you go, make sure to like, comment, and subscribe for our next lesson, where we'll be diving deeper into the world of chart reading and trading. Risk warning: trading involves financial risk, and there are no guarantees of profits. Always practice with a demo account or paper trade before risking your capital.